going on, Derek? What's going on, FW? What's going on, everyone? Welcome in. Tariq, what's going on? Welcome in, boss. We'll get started here pretty shortly. A lot of alerts actually triggered off today, but I'm not going to be too long on them, so we'll try to run through them pretty quickly. Try to give you a quick little recap of what pretty much went on today. But I will start off pretty much with my expectations for SPY. So I know that a lot of you just want to know more so what to expect going into tomorrow. So I'll just give you a quick expectation tomorrow. And then we'll run into those alerts and see where we stand going into tomorrow as well. All right. But welcome in, everyone. Welcome in. Welcome in. What's going on, Keith? All right. So let's get started real quick. So I can go ahead and give you a quick update. We did attempt to make basically a lower low here today. As you saw, we pretty much had a nice little indecision candle upon filling this gap fill in that red shaded area. So we did end up filling that gap here today. We had a nice little wick down as bears usually got pretty happy right there and they expected more escalation to the downside, but then bulls really just tried to fight the trend, and that's where we ended up seeing that bounce. We had a beautiful little wick right back to the upside following it. We just weren't able to hold it, and in terms we pretty much just went sideways with a little bit of a downside reaction towards the close there, and that's basically what we all saw. Now, what was a good sign for me is that the overall market close today was still within the gap fill of SPY. So we ended up closing in above 367.81. That was a good sign for me, and especially since I'm holding lottos on Tesla. That was what I was actually looking at. But the overall big picture wise is going into tomorrow, we do have data tomorrow. That's pretty much your wild card. That could either send us up or down, right? So we do have the non-farm payrolls tomorrow, and that's what we'll be looking at going into tomorrow to see what the reaction is following that. Now, my anticipation is if the numbers are bad, then that would ease the pressure off of the Fed rate hike. But if the numbers are good, then that's going to put even more pressure for the rate hike coming soon. All right. And that's going to be pretty bad for the market. So if we do get, in my scenario, if we do get good numbers going into tomorrow's data, then we're likely going to get a nice little, I wouldn't say gap down because probably going to be pretty late in the morning, right into pre-market hours, about between 8:30 to 9:30 in the morning. But I do expect a nice little flush at market open, in which we're going to open up range down for SPY to be 462, 461 at the very worst scenario at the end of the day. All right. Now, it could be a slow bleed, it could be a fast bleed in which we pretty much just sink and then we're just floating right around that area of 461, 462. And that would pretty much entice a lot of bears. And you'll see them pretty much dancing in the premium chat. Otherwise, if we get the bad data and that's going to ease the pressure of the Fed rate hike, then that's when we're going to potentially get a bounce, which that's what I anticipate. We're going to get bad numbers. Following the jobless claims from last week, I would expect that we're going to have bad data going into tomorrow. And that's going to open up way for the bounce continuing on what futures are currently doing right now. And that's when we can end up retesting as resistance from where we broke down on the megaphone action. So that could easily push us towards north, maybe into 472. That's a high possibility on SPY here. Doesn't necessarily mean that 472 is going to hit tomorrow, but that could easily push us towards 472 until we get that next leg down, possibly likely going into next week. All right, that's what I would anticipate. If we got that move to the upside, that would just be beautiful. I would gladly like to see Gaston and Tamakaze actually have to double down on their puts that they're currently holding, and then that would pretty much give us an opportunity to enter those puts following the bounce tomorrow. All right, that would be my ideal scenario to play out tomorrow, and that's why I am going to go ahead and look to see if my Tesla calls end up paying out, and I'll take my quick little profit out of that, and then I'll look to see where I potentially want to short, and it's more than likely going to be that 472. It just depends how strong that momentum is, or if we really just see a lot of weakness despite that data being good for the market for potential bounce. And so, big picture wise, is that we are still in a defined downtrend, even if we get what I would say is a dead cat bounce up to 472. just keep in mind that we are still in a defined downtrend. That's the big thing that I basically want to tell everyone, right? And Tom wants it all to burn down. So if we end up pushing on SPY tomorrow, we're gonna end up seeing Tamakazi and Gaston have to double down on their puts, and I'm gonna enjoy that part because then I'll probably end up getting in at a cheaper rate. So they're gonna sell me their calls, their SPY puts for a cheaper rate, and I'm gonna gladly take that because then I will take that next leg down after this bounce happens. All right, but again, data tomorrow. We'll see what if it's good or bad for the market. I would presume if data is pretty much bad, that's gonna pretty much ease the pressure off of the rate hike, and that will allow for a dead cat bounce. That would be my anticipation. But either way, either I would expect us to go to 472 for the bounce, or we pretty much sink right down to 461, 462 on SPY, and that's when bears will literally just be happy. All right. But real quick, running through the alerts because we did have quite a bit of alerts today, and I don't want to pretty much drag it all out. So I'll try to cover it pretty quickly here, just running through it, give you where your scenarios were, what you pretty much wanted to execute, how you wanted to execute real quick. But of course, starting out with Tesla. And when I actually saw these rapids come through Tesla this morning, I was like, are you joking? Right when the market's about to tank, we're about to actually get an inverse here with Tesla. Because if you're familiar, usually when the market's doing pretty bad, Tesla ends up spiking. And once I saw those rapids come through just repeatedly, I was like, all right, so this is going to be a day where Tesla moons and the rest of the market just pretty much drops. But that wasn't necessarily the case. We had a quick little drop off. We had a nice little V-shaped recovery, if you want to say that. But you see at the standpoint of where they ended up getting in on those rapids. And that was a question mark right there. Because if you did not pretty much do what I normally say for everyone, I preach it on live. I preach it pretty much every night. And I usually say to set a low balling order in which you would have got filled on one of these wicks down to the downside and you would have right back up. So you potentially had an opportunity to get in as low as say what 1072 off of those moves. They got to fill at 1078. You potentially had to fill at 1072 and you had an opportunity to get out as high as 1085. So that's why I usually say try to set a low balling order, set a limit order, and that way you can ride that candle or the next candle right back up. All right. So that's what we'll be watching. And Tom is right. The data does come out 1 hour before market open, and that's why I say that 1 hour you're likely gonna see that reaction into the open, but who knows? We may even open flat off of the data and then we'll get delayed response. Pretty much like how we ended up getting the Fed minutes. You saw that first wick pretty much be the wrong response and then just a flush. So don't be too quick. I would probably wait if we do end up opening flat. Just wait for the market trend to really just take form before you jump in, especially being that it's 0 day tomorrow for those of you who are trying to go same day expiration. All right. But back to what I was pretty much saying is hopefully you said a limit order here on Tesla, because if you did not or if you held it too long, then that contract on those rapids pretty much just sank. And that's what you did not want to end up being a part of. Now, I did end up getting a scout position on calls here, and this is when I saw this defined downtrend resistance. And I know that just being so familiar with Tesla, and knowing that when it usually trends along a resistance line, it ends up breaking out. Of course, I was watching SPY and VIX at the same time, but I did end up getting in a scout position, and I pretty much exited right on the top of this wick, on this massive wick here, around 1076. I probably got my fill at 1075 and some change, and then I ended up wanting to get a retest. So 1068, 1070 was my area I was looking for a potential dip buy, and that was the range I wanted to get in a quick little lotto spread for tomorrow. So I did end up waiting just towards the end of the day because I did see it getting a little shaky, and that's when I ended up taking my lotto spread for tomorrow. Got to fill right around about 1065 ish, and so we'll see what that does tomorrow. If it doesn't end up working out, if I don't see the market reaction in my favor tomorrow, then yes, I will likely just cut it at open because it does expire tomorrow. But I basically risked about $200 to make potentially, I think, about 1,000 and some change if it goes over 1120. So we'll see what it does. I'm pretty much only expecting 1110. So once one of those legs go in the money, I'll likely be able to cash out on that pretty nicely. All right. So next one was IBM. I know that Tom was looking at this pretty much late in the day, and we didn't expect this to really be a banger, but this ended up paying out pretty nicely. If you see the little white line right here, this was right around the market open here. That's when they ended up getting in at 9:38 in the morning. So we ended up having those. It was a 140 put. My only concern when I saw it initially was that they went in the money, and just knowing how IBM is, it doesn't typically move that much, and that's what my concern was. And so I didn't necessarily take it at the moment I saw it. When I look back, of course, and if you see it, they got in at 136. We literally hit a low of 132.81 or 132.51. So that ended up playing out about a about $4 and change move to the drop to the downside, and that ended up working out. The other one was Oxy, and this is more so a Tom type of sector, and I would say more so SIG. So when you usually want to know about energy and oil, it's usually a Tom. You usually want to go to Tamakazi or you want to go to SIG. That would be what I ideally tell you to go to, because I would say that they're more so, they have more expertise in that area, because they particularly have been following that area for much longer than say me or Avery have. Although me and Avery are more tech wise, they do end up in different sectors, and they do follow a lot more often than me and Avery. So anything related to pretty much energy and oil, that's who I would direct you to. But this one pretty much was a really bad rapid that came out. They hit it at 9:43, and this ended up giving you pretty much a hard reversal to the downside. So I wasn't too happy about this one when I saw it after like about a few minutes, and I saw it pretty much just sink. I was like, ouch, that has to hurt. But on the flip side, they did give themselves quite a bit of time. They have until next week expiration. They also did go basically right at the money, and it wasn't too much of an expensive premium. So it it all depends if they're pretty much planning to hold for next week. Maybe they ended up selling out, just depends, and this would have pretty much applied to having a stop loss. If you really hit maybe that 10-15% stop loss, you would have triggered that and pretty much moved on with the day. All right. Next one was Twitter. I was watching Twitter yesterday actually, and when I saw the unusual calls come through, I was like, do I want to take that? But due to the market environment, I stayed sidelined on this one. But they ended up hitting this one right pretty much in the middle of this downtrend. After we had that little morning pop, we had that nice little downtrend. They picked it up halfway and then ended up sinking. So the only problem here is that if you would have ended up getting this contract, of course you would have got a low balling order like I usually preach, and then you may have had to double down on it until you get the next rip higher. So this one was a little bit of an awky situation, because you definitely would have had to double down at the bottom, or you would have hit a stop loss. That was pretty much the two scenarios right here. But overall, they did go out of the money. They got next week expiration, and they did have over 100K in premium, which pretty much usually hits my criteria that I prefer. All right. Next one was Apple, and I know that I believe Tom is actually holding Apple puts right now that are probably gonna sink tomorrow morning, but we'll see, because I believe futures are really gonna push tomorrow. But they ended up hitting unusual calls and Nimbus calls. Pretty much same scenario off of Twitter. You got the little morning pump. You had that leg down, and then you basically would have had to average down here at the bottom, or you hit a stop loss. So not ideal. Of course, they did go out of the money also. They went next week expiration, and it was 120K in premium. It's just the conditions that you are really trying to buy the dip in is really just not ideal. So that's one thing, if you notice here with the Twitter, with the Apple and the Oxy, the environment that you're currently in, and just knowing that it's a still a defined downtrend from pretty much all-time highs that we had recently, you are still in a defined downtrend, in which case you see people trying to buy the dip, but you definitely want to fall back on your own TA before you just jump in blind on calls, knowing that this is not pretty much what I would say is a typical bull market now. You're in a defined downtrend. All right. So I just want to make sure I get that point across. The GME one, I don't think I necessarily need to go through this one. They had news after hour. They literally pumped about $40. I think they're still up about $33 and some change after hours before it closed. But what one thing that I actually did notice about this one is that they literally got a beautiful position, because if you see, they pretty much almost tried to snake the bottom off of this. Now, did they know news or not? That's pretty much hard to say. But just the fact of the timing that we haven't had a GME alert off of the flow alerts for quite some time, and it just happened to pop up, and then the same time having all pretty much, we have beyond Bed Bath and Beyond having earnings also. just a little bit of coincidence and all that happening. All right, but they did go out of the money. They gave themselves 2 weeks of expiration, so who knows if they end up writing it out or they end up taking profits tomorrow morning. So just something to think about. Next one was Arc, and we know that Arc's just been punished. I mean, this has just been brutal. The only thing that you do have to be worried about is, of course, these intermittent bounces. Basically, like how we're anticipating a bounce tomorrow. Uh, if futures do hold, that's what you want to basically be doing is shorting the bounces. So I would particularly be more so wanting to short the bounce if this ends up uh, basically having a nice little green day in the morning. I'll short that bounce because again we're basically in a defined downtrend and that's only going to lead to art going further down. But they did get a nice entry here. I like this one. They got filled at 83. We hit a low here of 82.65. So that was a beautiful one. You basically would have went in the money, and that was a nice little pickup that they had. And I would assume that they ended up that was just basically a scalp for them, and they sold those contracts. All right. Next one was Nvidia, and I was actually pretty high on Nvidia. If you heard me this morning on live, and the first two things that I pretty much tried to point out on live here this morning was one is finding the relative strength, and that was me pretty much calling out Facebook because Facebook was green this morning. They were up early in the morning about $4 and some change, and when we pulled back, they basically pulled back to flat before ripping about $13 and change midday. And so that was one of the big things that I usually try to do in the mornings, especially is pretty much sorting out where the relative weakness is and where the relative strength is. And that's where I was able to find Facebook. And Nvidia actually caught my attention because they actually have an event coming up on Monday. That's the 10th, I believe. So looking at a catalyst in terms of where this environment is I want to look for the relative strength, A, and B is what stocks actually have particular events coming up as a catalyst. So that's why I ended up looking at both of those. We saw at a certain point of the day, Nvidia was up pretty much. Where did we hit a high of? We hit a high of 284. It was up about close enough to $7 and change. It closed up about $5 and change. So I did call that one out pretty early in the morning, and I was pretty high on that one, given the fact that it had a catalyst coming this Monday. So those are things that you definitely want to pay attention to. But those Nimbus and Unusuals, I think I called that out before these even hit the flow alerts. All right. Next one was Rivian. I didn't. This one didn't really catch my attention because I think I missed it and I probably caught it a little too late. But they hit the Rivian puts. They hit it at 11:21. I didn't even look at this one. I just added it here, and they hit this one at 83.30. So at 11:21, looking for 11:21 real quick. Let's see, right around here is when they picked this one up, and 83.30, going down just a bit right around here is where they picked it up. So they basically got it right on this. What I would say is this was a little bit of a rising wedge action. They took that first candle on the breakdown of trendline support, and that was likely a scalp because if they didn't get out at this low here of 81.89, they pretty much got destroyed because it went right back up. Or they're still holding because they're expecting a larger move. Now, given the fact that they expired tomorrow, I would assume that they ended up taking that they end up selling their contracts pretty much before close. But it did have everything that I was looking for. It was out of the money, same week expiration, and minimum was 105K in premium. So I liked it overall, but it definitely was a quick scalp, like maybe an 8-10% quick move, and you were in and out of that trade, and that was it. All right. And of course, we had Blackberry. Um, with all the memes going on, it wouldn't be right without having BlackBerry here, of course. But we do see first thing notice is that they gave themselves quite a bit of time. February 18th, quite a bit of time there. They did go out of the money, and it was 119K in premium. So they hit this one at 11:25 in the morning. See where they hit this one real quick. 11:25, 11:25. So right about here is where they hit it. They hit it at 890. So they basically tried to take it right here on this little bit of a flag formation. It's just a little bit of, yeah, it's a flag formation, and you basically got in trying to pretty much snipe that low entry, and you took it right into the peak of the day, in which that went in the money at 902. So nice little scalp right there, as you see. And then the last one was just Baba that I want to highlight. Of course, Baba had a beautiful day today. We'll be looking to see what China does here overnight and to see if there's any continuation. I know that Sig actually had a beautiful chart on Baba, if I'm not mistaken. So probably check out the Tendi shop because I know that he had a beautiful chart on it. but they hit this one at 12.11. So looking at 12.11 real quick, they hit it right here at the bottom before it ended up getting a nice little rounding bottom action. They picked it up at 127, and you had an opportunity to get out at high of 128.18. So nice little scalp opportunity yet again, and that's pretty much what today's was for the most part. It was a lot of scalp opportunities, not a lot of huge moves, unless you really pretty much picked up on my early trades of looking at Facebook or Nvidia for the day. There wasn't too many large moves. You were pretty much range bound for most of the day. And then I know that everyone was pretty much looking for the drop to close the market session. But that was pretty much all I was looking at. Again, we'll see what if futures end up holding by morning. I would likely anticipate that futures are going to hold going into the 8:30 data tomorrow morning. And then that data will likely even take us flat into the morning, or we'll end up seeing a further continuation and we're going to see a nice little bounce going into tomorrow. And then more than likely, we'll see blood continue into next week. So keep in mind, we also do have bank earnings. I believe they start on Friday next week because I won't be on live tomorrow night. We also do have bank earnings that start next week Friday. I believe it starts off with Citibank, and then after that week, then we also start with tech earnings, which I believe Netflix actually kicks off tech earnings. So things to keep in mind. The other thought that actually crossed my mind also was that we do have retail data that also comes out next week. So that is something to keep in mind. I may end more than likely, I wouldn't be surprised if a retail stock ends up on the newsletter this weekend. One of my favorites will probably be Target. So keep in mind if you're looking for a swing position tomorrow, I would likely target three areas here. Either you're going for Dow stocks, you're going for banks, or you're going for retail for a possible run up. But you definitely don't want to have a large position because, again, you're still in a defined downtrend, obviously. All right. But other than that, I'll leave you guys with that. Let's see what the market does after the data tomorrow, and we'll be on live to pretty much call it out, see what direction we have, what trend forms, and then if Gaston or Tamakaze end up having to double down on their puts that they have, which would be pretty much enjoyable for me. All right. But other than that, let me see the quick comment. Not many of those rapids that I have. Basically, what Dan typically does in this is pretty much an update here. Like if I give you an example, so I'm not pretty much trying to blindly say anything here. And this is where I give you an example, say on Twitter here. And we also had it, I believe, on Apple. But if you're basically looking at that for Bear on Beach, this is what I basically want to show you is that if you see the white line that I have here, particularly on Twitter, I'm going to zoom in here on this morning's action. If you see the white line, that's basically where the rapid went off. All right. So initially, what we would do, and I can't say exactly for Dan where his initial entry point is, but what I pretty much preach here every night and also on live is that you set a low balling order. So whatever the current asking price is at that time when you see the rapid come out, you basically want to set a low balling order. In which case, if that order came out here and it pretty much was right around 39. You want to try and set a low balling order so that you get filled at the low end of this candle. Maybe you get filled, excuse me, at the low end of 39.43. That would be your initial point of entry, right? But that would be a small entry that you're going in with on that rapid. And then what would typically happen, and this depends on your risk tolerance, and this is what I know what Dan typically does, is that when you get to the bottom or close enough to the bottom, you would have averaged down quite a bit. And so that way, once you get the bounce, that's when you would either be at break even. And if the bounce continues, you basically end up with that quick 8 to 10%. All right. That would be the ideal scenario in which you end up trying to make that trade. Now, of course, if this would have continued to bleed out, then yes, that would have been quite a heavy loss because you would have ended up averaging down here and it would have been a harder way to get out of that trade. So that's what the tricky part about rapids. But what we normally say is that you enter a small amount in your initial entry, then you wait to see if there's a downtrend. If there is a downtrend, you try to average down, and then you wait for the curl right back up. And that's basically what you had. It's just that this downtrend was quite extensive. So it basically would have hit a stop loss. You probably would have panicked in terms of how much you were down on the position. and it all depends on what spot you would have averaged down. All right, but that's when it does get dicey. But I do know that Dan pretty much tries to average down pretty heavily once he usually sees it continuing to decline, and that's where he catches the reversal going right back up. All right, but that gives you that update there. But other than that, the okay, appreciate that, Ty. Other than that, Microsoft, I'll take a look at it real quick. I wasn't gonna look at any charts. I mean, again, we're pretty much in a range right now in which it's hard to say where particularly we're going per se. And this is why I mentioned last night is that you definitely want to look at the larger time frames. And I haven't even looked at Microsoft too much. All I know is that if you see this little sideways channel, basically, you had a nice little double top action, and you ended up breaking the bottom level support. So you had that nice little retest here this morning, and so now you're basically waiting for the next leg down. So you did break your uptrend primarily. That's the biggest thing I'm assuming that you want to identify. And so basically what you're waiting for is you're going to see if this next candle again retests your resistance level if we get the bounce tomorrow morning. If we don't get the bounce tomorrow morning and we don't retest the resistance, then it's likely that we're making the next leg down. That's basically what you're looking for. And then, of course, you're targeting where your next level of support is. So if I'm looking for your next level of prior support, you're looking right around this level here of 305. So that will be your next longer dated target for your support, because if we continue to bleed out, that's where you're likely going to end up targeting. Is that 305 because that was your prior level of resistance that you broke out from. All right. So that's big picture wise for Microsoft there. Okay. But other than that, I'll wrap up with that, guys. Let me just read your last comment. I'm assuming when you say half a position, I'm assuming you're meaning like what I mentioned with your initial entry. Yeah, you would get your initial entry. If it didn't pull back, you would take your 8 to 10% and you'd be out of that trade basically. That's basically what I would mean by that. But you're not going in with a full size position initially, because just like you would end up having to average down, you basically do not want to have to go in with a full size position, see your entire position go down, and not have the ability to basically double down on it or average down for that matter. Okay, so that's pretty much what I was trying to echo on that sentiment. But the biggest part is usually when you enter with that initial entry and you see it such a steep decline, like that Twitter, like the Apple one. Also, if I zoom in on Apple's chart this morning, also pretty much same scenario that you had from where they entered here. If you see same scenario, it's just that this dip wasn't, in my opinion, as bad, but you would have got in right around this area, and then you would have had to average down at the bottom. So same scenario with Apple. It's just that the downside wasn't as steep as Twitter. So that was pretty much a special occasion there. It would have hit your stop loss, or you would have had a high risk tolerance on that. Pretty much. I'll leave you guys with that, and you guys have a good night then. All right.